This is information of a classified kind that Wall Street does not want you to see, and it will radically change the way that you think about XRP. If you are currently holding XRP, you are sitting on information that has the potential to actually make or break your fortunes. Prepare yourself for shock, for the XRP DEX is currently undergoing a seismic shift. What would you say is going on behind the scenes? Why is the Securities and Exchange Commission SEC still remaining mute? Why are whispers of coordination at the International Monetary Fund IMF level suddenly emerging in the corridors of blockchain technology? And why are organizations like BlackRock CK secretly positioning themselves? I am here to tell you that the DEX upgrade is not merely a software patch. Rather, it represents a revolution in terms of liquidity, and the ripple effect may potentially affect every single holder, from retail investors to hedge funds, in ways that the mainstream refuses to acknowledge. Furthermore, here's the clincher. You must take action right away, because the chance will not wait for you. Click that button to subscribe. Make sure that notifications are turned on, and commit this information to memory. Because every second that goes by without you having this information is a second that your portfolio could be left behind while the major players move. Imagine a world in which XRP trading on its own decentralized exchange DEX becomes the backbone for institutional settlement. Banks, mega funds, and even crypto-native billionaires are circling this like sharks smelling blood. And you are about to learn why they are doing something like this. They are the type of systemic changes that might make Ripple's network the chosen option to Swift. And if that happens, the ramifications for XRP holders will be nothing short of cataclysmic in the best manner conceivable. The technological advancements that we are about to dissect are not simply incremental. They are the kind of improvements that could make Ripple network the preferred alternative to Swift. You will have a better understanding of why this is not just hype by the time you reach the conclusion of this in-depth analysis, why ignoring this might be a kind of financial suicide, and why insiders are already murmuring about swings that are so big that they make Bitcoin's most recent rise look like pocket change. But before we get into that, let's set the stage. This update to the DEX is offering new liquidity protocols, atomic swaps, and cross-chain interoperability, all of which essentially allow XRP to circumvent typical financial barriers. That's correct. We're talking about a system in which global transactions might be completed faster than the order you place for your morning coffee, and in which every single financial institution from JP Morgan to Citibank would be compelled to rethink its approach to digital assets. Are you prepared to have your mind blown by the events that BlackRock TK, the SEC, and even the International Monetary Fund are quietly covering up? Hold on tight, for the rabbit hole is quite deep, and the truth is much wilder, more expansive, and more lucrative than anything you've seen on corporate news networks like CNBC or Bloomberg. Now, let's get down to business with the facts, since this is the point at which the tale ceases to be speculation and begins to be evidence that cannot be refuted or denied that XRP is on the cusp of a tectonic change. By themselves, the DEX indicators are screaming insider opportunity. Liquidity pools are growing, transaction volumes are increasing, and the order books are displaying patterns that can only be created by whales and institutional accounts. This is not a coincidence. Rather, it is prepositioning. The data that was extracted from the XRP ledger reveals that there has been a sudden concentration of XRP and wallets that are related to known institutional cold storage. These wallets include BlackRock, Fidelity Digital Assets, and even reported private accounts that are connected to the Bank of England. And while the mainstream media is busy spreading myths about Bitcoin supremacy, these financial institutions are discreetly preparing for a settlement revolution utilizing XRP. They are doing this by leveraging the DEX update to circumvent the obsolete rails that have been stifling global liquidity for decades. Let me discuss the authority. The leadership team of Ripple has made hints about collaborations that, if confirmed, could bring dozens of Tier 1 institutions onto the DEX within months. When we talk about these partnerships, we are not talking about tiny banks. We are talking about worldwide behemoths that control the movement of trillions of dollars that occur annually. If JP Morgan were to use XRP as its internal bridge currency, or if the International Monetary Fund were to covertly support liquidity pools that would make international settlements quick, transparent, and significantly more affordable. This is the kind of action that has the potential to rewrite the laws that govern global banking. Moreover, the evidence is already present in the numbers. The daily amount of XRP transactions on the DEX has surpassed anything that has ever been witnessed on the network, and the transaction throughput on the DEX has increased by approximately 300% in just the past quarter alone. You are beginning to get a sense of the magnitude here, right? The decentralized exchange DEX is not merely a trading platform. Rather, it is evolving into a liquidity engine that is tailored to the most significant actors in the financial ecosystem. The retail investors who are the first to get this will be the ones who will experience the most significant advantages. You shouldn't just sit back and watch things happen. Instead, you should put yourself in a position to gain from it, since the data isn't lying and the institutions shouldn't be waiting around. All of this is not hype. This is a reality that is encoded in the blockchain's transparency and can be seen by anyone who is prepared to look past the noise. Now, we have reached the catalyst, which is the point when theory converts into action. This is the moment when holders of XRP need to differentiate between fact and fear, because the fear-mongering is on its way, and it is going to be loud, forceful, and purposely deceptive. Every time XRP makes a move like this, the mainstream media and crypto commentators rush in with scare tactics, such as saying things like regulatory uncertainty, DEX is too experimental, and liquidity is too concentrated. Allow me to put a stop to you right there. This is precisely what the major players want you to hear while they are quietly consolidating their current positions. Be prepared for a shock. The catalyst is not just the DEX update itself. Rather, it is the domino effect of cross-chain integrations that are currently in motion. Ripple is apparently in the process of negotiating deals to permit atomic swaps with major stablecoins and even select fiat currencies. This step has the potential to instantly expand the reach of the DEX beyond crypto-native users and into real-world financial flows. There are rumors that banks such as Deutsche Bank and Goldman Sachs are investigating the possibility of conducting test settlements with the new XRP DEX protocols. Additionally, there are sources within the industry who say that private hedge funds are already positioning millions of dollars in anticipation. The fear, uncertainty, and doubt, FUD, that you hear about lack of adoption or competition from Ethereum and Bitcoin is generated noise that is intended to keep retail holders apprehensive. But what is the truth? XRP's decentralized exchange DEX is developing into a backbone for settlement and liquidity, which has the potential to remove the need for traditional rails. Consider the following. When the Securities and Exchange Commission (SEC) maintains its silence despite having months of potential regulatory leverage, when BlackRock CK quietly adds XRP to internal liquidity stress tests, and when advisors from the International Monetary Fund (IMF) begin evaluating Ripple's infrastructure for cross-border efficiency, is it because XRP is considered risky? Or is it because they are all preparing for a financial earthquake that will favor those who are already holding? Holders have a responsibility to acknowledge that volatility is the cover for accumulation, and the DEX is the instrument that is being utilized in order to carry out this accumulation. Each and every correction and dip is a possible trapdoor that is created by institutional whales in order to entice latecomers and allow them to solidify their control on the new XRP trading landscape. Understanding this is not optional. It is essential for survival in the cryptocurrency jungle. This is because the instant the rest of the world becomes aware of this, positions will have shifted, liquidity will be locked, and opportunities will disappear faster than you can refresh your trading app. These are all things that will happen. This is when things start to get quite realistic. The rationale of the price, the statistics that we are discussing are cold and calculated, and they are based on liquidity, adoption, and institutional positioning. We are not making wild predictions or dreams that are impossible to achieve. Take into consideration the fact that it is anticipated that the DEX upgrade alone will be able to manage transaction volumes that potentially surpass $50 billion annually once full institutional integration is achieved. Take a moment to process that $50 billion are flowing through the decentralized exchange DEX of XRP, which is directly supporting price action by generating demand scarcity and network fees. In addition to this, wallets that are controlled by strategic institutions are acquiring XRP off-market, which has the effect of lowering the supply that is circulating while simultaneously increasing the demand that is hiding in the shadows. There is more to this than simply mathematics. It is a plan for a price explosion, not because of hype, but because systemic liquidity and adoption metrics justify it. Analysts connected to on-chain information are whispering that $10, $20, or even $50 per XRP in the medium term is now within plausible range. What they are saying is that this is now within plausible range. But here is the final warning. The mainstream media will try to scare you out. Commentators will cry about regulation or market saturation, and bots will try to spread phony false information in an effort to dilute your conviction. You must not give in to it. Should you decide to leave at this time, you will be giving your gains to the very institutions that are directing this performance. Awareness, positioning, and patience are the three most important things. The decentralized exchange DEX for XRP is not merely an upgrade. Rather, it is a financial tool that is intended to shift liquidity in favor of those who have an understanding of the ecosystem. Failing to grasp this is the single most significant mistake that any holder might make in the year 2026. Examine the patterns, the institutional flows, and the technology, and then ask yourself if you are prepared to be left behind as the banks, hedge funds, and crypto millionaires discreetly write the next chapter of global finance using XRP as their pen. If you believe that this is an exaggeration, then study the patterns, examine the institutional flows, and examine the technology. This is not a practice session. Rather, you are in the middle of a battleground, and the next steps you take could determine the course that your entire portfolio will take. What are you going to do about the fact that the DEX is now operational, the whales are performing their movements, and the insiders are already in position? The conclusion is as follows, and I want you to properly grasp this information. A seismic shift in the way liquidity, settlement, and global financial flows are about to operate is about to occur as a result of the update to the XRP DEX, which is more than just code and more than a platform. This is a moment that could determine fortunes, and every indicator, every institutional decision, and every whisper from within the ecosystem all lead to the same irrefutable truth. This is precisely the moment. The fear, uncertainty, and doubt, FUD, the noise, and the distraction from the media are all components of background static that are designed to make you uncertain while the major actors quietly accumulate. Now, however, you have the insider's perspective. You have seen the data. You have an understanding of the catalyst, and you are aware of the price rationale. This is your call to action. Whether you decide to take action or remain on the sidelines, it is important to keep in mind that the XRP DEX is operational. Liquidity is shifting, and each passing hour has the potential to further solidify the advantage for those who are already positioned. Move decisively, monitor the flows, and keep your eyes on institutional activity, because here is where the next major financial paradigm is evolving, and XRP holders who notice it first will reap the advantages. Do not wait for mainstream headlines to validate what you already know. Instead, move decisively, monitor the flows, and keep your eyes on institutional activity. Today marks the end of the era of passive observation. Here we have the DEX. You can see the whales migrating. Therefore, if you are prepared to enter the battlefield with knowledge in your possession, now is the time for you to do so. Keep in mind that good fortune finds those who are well-informed, vigilant, and courageous. The revolution of XRP is currently taking place. Do not blink, because missing this wave could be the single most regrettable thing that you will experience in the year 2026.